Namaste everyone, this is Rupi Raja and today I will give the NFO review for Nippon India Nifty 500 Quality 50 Index Fund. Talking about this Nifty 500 Low Volatility 50 Index Fund, the launch date is 16th April, the end date is 30th April and the allotment date is 7th May. No exit load is charged if you redeem or switch your funds. The scheme performance is measured against the Nifty 500 Low Volatility 50 Total Return Index. Talking about what is NFO, NFO is the first time an investment firm offers a new mutual fund to its investors. It is just like an IPO, but it is for mutual funds. The purpose of an NFO is to raise capital for the fund and attract investors for the first time. Talking about what are mutual funds is a financial vehicle that pools money from many investors to invest in a diversified portfolio of securities such as stocks, bonds, and other assets. Investors buy units, that is net asset value units, in the mutual fund, becoming partial owners of all its holdings, and a professional fund manager manages it on your behalf, and an expense ratio is charged for it. Talking about the fund manager for this index fund, the fund manager is Jitendra Tolani, and the past performance of this mutual fund manager, that is Jitendra Tolani. I have gone through his other index funds and I feel that his past performance has been good. And even the fund house, that is Nippon India, their core strength lies in the fact that they have pioneered passive index investing in India, and they have a very experienced management team. Talking about the returns, the 10-year CAGR for this fund has been 13.1% versus the 13.1% of the Nifty 500 benchmark total return index. So, looking at this return, I will personally not even invest in the index fund, because talking about from an investor perspective, you should have a good return ratio, and here it was not very good. So, I personally am not a very good fan of this quality index fund. The concept of quality investing is based on selecting financially healthy companies on the basis of profitability, low leverage, and earning stability. It translates to return on equity, debt to equity ratio, and consistency of EPS growth. The selection weightage for these three parameters is given on the next three slides. This index fund is diversified across 13 sectors and consists of sector rotation based on the quality score. And how this score is calculated, I will show you. So 33.33%, that is one third of the score, comes from return on equity, and return on equity refers to a financial ratio that measures a company's financial performance, and it's calculated using net income divided by the shareholders equity. Return on equity portrays a company's profitability and efficiency in generating profitability. The second one third score is given to debt to equity ratio of the company, and the debt to equity ratio of a company refers to the ratio of a company's total liability to its shareholders equity. This ratio analyzes the extent of a company's reliability on debt. The lower debt to ratio indicates lower leverage and it gets a higher preference, obviously. The last one third score comes from earning per share, and earning per share analyzes the variability of earnings growth, that is EPS, over a period of 5 years. The year on year EPS growth variability in the previous 5 financial years is calculated using adjusted EPS of previous 6 years. For IPO companies, the EPS variability is calculated using the past 3 financial years, so it becomes total 4 previous years. The companies with higher stability in year on year earnings get higher preference. Asset allocation: 95 to 100% of the fund will be allocated to equity and equity related securities of this fund, and 0 to 5% will be allocated to debt and money market instruments, and it is done to manage the liquidity and redemption of the fund holders. Talking about the tax implications, short term capital gains, that is STCG, says that if units are sold within 1 year, gains are taxed at 20.8% including surcharge. Long term capital gains, that is LTCG, says that for holdings exceeding 1 year, gains are taxed at 12.5% after a exemption of 1.25 lakh per financial year. The IDCW options says that dividends, if chosen, are taxed as per investors income tax slab, with tax deducted at source applicable on payouts exceeding 5,000 rupees annually. IDCW stands for Income Distribution Cum Capital Withdrawal, and it refers to a mutual fund option wherein a portion of the fund's profits, including dividends and capital gains, is distributed to investors at regular intervals. Personally, I'm not a very good fan of IDCW option, and if you want, you should also not go for this. You should also get a good mutual fund advisor if you do not know anything about the stock market. If you want, you can type down your queries in the comment section, and I will try to help and answer your queries. Personally, looking at this NFO, my opinion is that I will go for large cap actively managed mutual funds or flexi cap funds instead of passive ones like this quality index fund, because the duration of rebalance is very long at 6 months. And since I am young, I will take more risk and invest in a stable core outperformer mutual fund like a Parag Parik flexi cap rather than a standalone bet on this index fund. Talking about suitability for all investor types, I will say if you are conservative investor, go for large cap funds and you can give it a skip. For others investors as well, like if you are balanced investor, if you are aggressive investor, if you are goal oriented investors, if you are a passive investor, if you are a diversified investor, if you are a speculative investor, if you are an active investor and young investor, you should all give it a skip, and you should allocate good percentage to gold, large caps, mid cap, small cap, and other mutual funds. Personally, this index fund is not very good and I will not invest in this index fund. So the scheme details has been given here, and I will also attach the scheme details of the document in the description of this video. So that's the wrap on today's NFO deep dive. We have crunched the numbers, dissected the story, and now it's your turn. What do you think? Drop your thoughts down below, hit that subscribe button, and let's keep decoding the market together. If you have any queries related to this NFO or anything related to mutual funds or stocks, you can type them down in the comment section and I will try my best to solve your queries. Thank you. This is Rupi Raja. Hope you like this video. Thank you.